Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if companies are actually doing great or just saying they are. Get ready, because RYVYL Inc. released their proxy statement, and let me tell you, there's a lot going on, especially with their stock price and how they plan to fix it. First off, RYVYL is getting ready for its 2025 annual meeting of stockholders. It's going to be a virtual meeting, so you can join from your computer. They're basically asking for your vote on a few key things that will shape the company's future. The big items on the agenda are electing new directors, approving their accounting firm, and two pretty significant changes to their company structure. They're looking to elect 3 directors. These are the folks who will be guiding the company. They also want stockholders to approve Simon & Edward LLT as their independent auditors. This is pretty standard, and it's good to know an outside firm is checking the books. Now, here's where things get interesting. They want to do a reverse stock split. This means they'll reduce the number of shares out there, and usually this is done to increase the price per share. But RYVYL is facing a problem where their stock price has dipped below $1 for too long, and if they don't fix it, they could get kicked off the Nasdaq Stock Exchange. They're proposing a split anywhere from 1 for 5 to 1 for 15. This means for every 5 to 15 shares you own, you'll get just 1 share back, but at a higher price. Just to give you an idea, on September 10th of last year, their stock was trading at a measly 29 cents. This reverse split is a move to get that price back up and onto a more respectable level, hopefully avoiding delisting. Before this potential split, they had over 31 million shares of common stock outstanding. If they go through with a 1 for 10 split, that number would shrink significantly to just over 3 million shares. This is a move to make the stock look more valuable and hopefully attract more investors. The main reason they give is to meet Nasdaq's requirement that their stock price stays above $1. It's a serious concern because not being on Nasdaq makes it much harder for people to buy and sell their shares, and it can make the company look less stable. However, there are downsides. While they hope for a higher stock price, there's no guarantee it will stick. If the price doesn't go up as much as they hope, the company's overall value, its market capitalization, could actually go down. Also, this could lead to more shareholders owning what's called odd lots, which are less than 100 shares, and selling those can sometimes cost more per share. Then there's proposal number 4, which is to increase the number of authorized shares of common stock from 100 million to a whopping 500 million. Right now they have 100 million shares authorized, and they've already issued over 31 million, with a bunch reserved for options and warrants. They see this increase as necessary to have flexibility for future funding, acquisitions, and employee stock plans. It's basically about having more shares available to use as currency for future business activities. They're planning to expand their business perhaps by buying digital assets and using cryptocurrency. To do that, they'll need more capital, and having more authorized shares gives them the option to raise money by selling more stock without another shareholder vote every single time. But it does mean that if they issue more shares, your ownership percentage could get diluted. Let's look at who owns the company. Freddie Nisson, the CEO, owns about 6.7% of the company. There are a couple of other big players too. S8 Global FinTech and RedTech Fund holds over 11%, and Arena Investors holds about 4.3%. Greenbox PA LLC, which is managed by Ben Erez and Freddie Nisson, owns about 5.8%. Looking at their financials, the company paid Simon & Edward LLP about $228,700 in audit fees for 2024, down from over $215,000 in 2023. Tax fees remained pretty stable. In terms of executive pay, Freddie Nisson, the CEO, made around $542,000 in $2,022,000 in 2024, which was up from about $766,000 in 2023. Made about $30,066,000 in 2023. Made about $30,066,000 in 2024. And his compensation figures are for his time with the company. As for stock options, Freddie Nisson has some unexercised options that could be worth something if the stock price rises. This next part is interesting, the pay versus performance table. It compares what the executives are paid to the company's performance. In 2024, while the company had a net loss of over $26 million, the CEO's compensation that actually counts under the rules after adjustments was about $430 of over $23 million. His adjusted compensation was about $280,000. For 2023, with a net loss of over $53 million, his adjusted compensation was about $280,000. For 2023, with a net loss of over $53 million, his adjusted compensation that actually counts under the rules after adjustments was about $430,000. For 2023, with a net loss of over $53 million, his adjusted compensation was about $280,000 for $30,000. For directors not involved in the day-to-day operations, like Brett Moyer and Gene Jones, they received fees and stock awards for their service. David Montoya, who resigned in June 2025, had a higher compensation package, likely due to his more active role or specific agreements. There are a few related party transactions mentioned. The company repurchased shares from an entity controlled by its CEO and chairman. Also, the CEO's brothers are employed by the company, earning significant salaries. These are common in many companies, but it's always good to keep an eye on them. Now, looking at RYVYL Inc, the company seems to be in a bit of a struggle, especially with its stock price on Nasdaq. The proposed reverse stock split is a clear sign they're trying to avoid delisting and make their stock appear more attractive. However, the core issue is their financial performance, which includes annual losses and negative stock performance. The pay for performance metrics shown in the report don't strongly correlate with the company's actual results, which could be a concern for investors. The increase in authorized shares does give them flexibility, which hasn't been demonstrated here. The main risk is failing to meet Nasdaq appear more attractive. However, the core issue is their financial performance, which includes annual losses and negative stock performance. The pay for performance metrics shown in the report don't strongly correlate with the company's actual results, which could be a concern for investors. The increase in authorized shares does give them flexibility, but it also carries the risk of further dilution for existing shareholders. The company's direction seems to be pivoting towards digital assets and crypto, but without a clear path to profitability shown. Alright, that's our breakdown of RYVYL's proxy statement. What's your take on these numbers and what they signal for the company's future? Do you think the reverse split will help, or is it just a band-aid? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. And hey, don't forget to check out our Discord community linked in the vid description for more discussions and insights. Thanks for watching. See you next time.